Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today.
Hi, Market Mamas host Becky here, and I am so excited, you guys. Today, I get to sit and pick the brain of a decades experienced trader and major entrepreneur in the trading world. I don't know about you all, but I first used information from my guest company a few years ago when I was getting serious about day trading, and this feels like a pretty cool moment for me to welcome him into my podcast now. So with me today is Eddie Z, a trader since the late 1980s and founder of EZ Trading Computers, a trading computer company with the goal to educate fellow traders about trading technology and offer them the highest quality computers at the lowest possible prices with the best technical support on the planet. And as you know, this company is legit because it was founded by a trader who gained his expertise by walking the walk in the markets for years before discovering a need and stepping up to the plate to meet that need. So yeah, I'm pretty stoked to talk all things trading and tech with Eddie. Eddie, thank you so much for being here with me today.
Thank you so much for having me. I'm excited to have this conversation.
Yeah, me too. So I think we, with all that we have to cover with your long and impressive history in the industry, I'm quite sure that we'll be splitting this into two sessions for the podcast because there's just so much, right? And my first love between trading and tech is definitely trading. So is it cool if we first get into and learn a little bit more about history and evolution?
Absolutely.
Okay, see. Okay, so tell me a little bit about how you got into trading. When, where would that look like for you?
Well, I think I had a bit of an unusual upbringing. My father was a floor trader on the New York Mercantile Exchange, where they trade commodity futures. So think back to when commodities were traded in the open outcry market, crude oil, platinum. What else did they trade? Natural gas, gasoline futures were all traded on the New York Mercantile Exchange in the old World Trade Center. And if you remember the movie like Trading Places with Eddie Murphy, the scenes, that was actually filmed at the New York Mercantile Exchange, that movie. But it was really like that. It was insanity. It's a lot of people packed into a small space. And first times my dad brought me down to work, I was a little kid, like 10, 12, 13. And the energy, guys behaving badly. It was the summer most of the time, so it'd get very warm in there and sweaty and cursing. And just, for an 11-year-old boy's perspective, I thought it was so cool, the energy of the place. Yeah. As I got older, my dad kind of taught me more what was going on. And he actually taught me how to draw something called point and figure charts using X's and O's on graph paper. So I got really into that, the idea of just like watching the price ticks up on the board and drawing charts. And when I graduated high school, that summer I worked on the floor. I was 17 years old. Every single summer, every single Christmas break, spring break, I had a job, not with him, but with one of his buddies. He'd get me some kind of job, something I could do to help so I could be on the floor and actually get paid, which was really neat. My plan was to go work on the floor once I was done with school. But as it turned out, I had a buddy working at a New York Stock Exchange member firm, and he was doing really well. He's like, just come over here. You always have that to fall back on. Come over here, and I'll teach you about stocks. You'll get on the phone. You'll get some new customers. So that was 94. So I started as a stockbroker in 1994. And being a stockbroker wasn't exactly trading. It was more cold calling back in the old days, a lot of cold calling, but we were recommending real stocks, not like the movie Boiler Room. But I happened to be in the right place at the right time in the mid to late 90s because of this new technology called the internet. And I was very, very lucky. So, and I was always kind of a computer nerd since I was like 10 years old. My first computer was a Commodore VIC-20, which is like a primitive dinosaur today. Or, your smartphone has 10 times, 100 times the power of these old computers. So I just love the technology. So I would get on the phone and recommend these types of stocks to people, and they worked. And in the late 90s, like 7 or 8 stocks out of 10 would work. Small caps, these stocks would double and triple in a very short period of time. It was really crazy. You think we've seen an incredible market recently, and we have with some of these AI names and quantum computing. But back then, it was, I can't explain it. It was remarkable.
Yeah.
And so I was young. I was in my 20s. I thought I was all that. I built a tremendous book of business. I was doing a lot of commission. I actually got recruited to go work for another firm. They gave me a lot of money up front to go work for them. This is in 1999. And then, of course, in 2000, we had the tech boom meltdown, And I got my bell rung pretty good on that one. So fortunately, I had a lot of clients who got in with me early, and then they made a lot of money. And so when they lost money, they didn't really give back their initial capital. But psychologically, I think that's the worst thing that can happen in trading for a lot of people is the first couple of trades, they make a lot of money. They think they're smart instead of lucky.
Yeah.
And then they wind up getting their bell rung. And that's where everything goes south from there. And that's a bit what happened to me, except it worked for like 6 or 7 years. I was a broker. And, but that's when I really learned how to trade. When that correction happened and my book of business took a big hit, I remember like towards the end of the year 2000, I had clients were calling me daily. I had to play psychologist for these people. And I started reading all these books on the market because I knew I had to do something. The firm was telling me, just keep them in the stocks. Don't let them sell anything. It all comes back. But it just didn't feel right as a stockbroker to do that.
Mm-hmm.
So I found one book. It's called How to Make Money in Stocks by William O'Neill. The book was totally different than any other book that I read about trading. And when I read this book, I knew exactly what to do. And that was to get everybody out of the market. Just get them out. And my firm was totally against it. They didn't want me to do that, but I did it anyway because it felt like the right thing to do. So I got them out of the market, and I just put money on the sidelines. And then in this book, he describes a system using very exact chart patterns in this book. And so I just waited for the market to bottom out. And took a lot of patience, a lot of no paycheck months, because the market didn't really bottom out till the March of 2003. If you go back and look at a weekly on the NASDAQ. The NASDAQ was like 1,200 at the time. That's how low it got. So the high in 2000 was around 5,300, and it had dropped 80%, the market. So that was a lot of patience. And then I started to tiptoe back into the market for my clients, and his system worked. And I was able to practice it some with my own money, and I was able to master his system. And that's what kind of saved me. So it was a big lesson. So probably 90% of the guys who were around me in the office were out of the business because they blew up their book, or a lot of these guys lost tons of their own money on margin calls. Everybody was trying to fight the crash in the big names. Yeah, it was brutal. So that's really when I learned how to trade, even though I've been around the market since 87. So I think I had like a magnified version of being in the right place at the right time, but not really knowing what I'm doing, but think I'm brilliant.
Yeah.
And that's a big, big, big thing for new traders, I think, is to recognize that if you don't have a system, you don't have a repeatable method that you can use every time, and it's not going to work 100% of the time. There's no system. So by the way, if you see these systems, these people who say, oh, I have a 97% win rate, don't believe that. That's nonsense. It's just not true. It's not possible.
Yeah. And that's not a healthy thing to ascertain to as a trader either. Like, that's not the way it works.
That's a sales pitch. That's what that is.
Mm-hmm.
So yeah, that's how I got into it. You want to hear the rest of it?
Yeah.
Okay.
Yeah, keep telling me things. It makes so much
So
sense though that you were like, you didn't really have to like really fully deeply have a strong risk management because you just were consistently doing well and the market was just flying. And so you just kept flying with it. And so then that, I love how you explain that you finally had to start really digging in and figuring out all the angles of trading once you actually were faced with a substantial loss.
right. You know,
Yeah.
you get a bunch of winners in a row. I was what, 26, 27, 28 years old. I was making a lot of money. I was cocky. I was arrogant. I thought I was special.
Makes sense.
And I wasn't. I remember even my dad, because he traded stocks too. By this time he was retired. So he was more watching the stock market. And for maybe 2 years before the crash, he was saying, "You're going to get killed, man. I've seen this happen." Because my dad started trading in the 50s. He's like, "This is a major bubble." But it never burst. For such a long time, it didn't burst that I
Right.
even started to write off my dad's opinion.
Mm-hmm.
And he was right. But,
You just watching it
I
be
wasn't giving up. I refused to give up. My whole life, I had planned Wall Street. That's what I wanted to do. So 2003, things started to improve. The market improved. I was able to really start buying the right kinds of stocks for clients. And when they didn't work, I would get out right away. The idea of putting in a stop loss order, it's like one of the most important lessons for traders, and especially new traders. Don't have unlimited risk. Know your risk before you enter the trade and put a stop loss order in. So if it doesn't go, if you're wrong, just admit you're wrong, get out of the stock, move on. And so that's really the method that I use even today. It's the same methodology. I've refined it more into a day trading system, but it's the exact same chart patterns. In the 2000s, I was able to do pretty well, but the whole way the world saw stockbrokers and financial advisors started to change then. A lot of the regulations changed, became much more difficult to recommend stocks on the fly. You had to submit all this information to like a compliance department. They had to approve the stocks you were recommending to your clients. It became kind of frustrating. And honestly, I was doing so well for myself, I just didn't want to hold people's hands anymore. So I kept that going until about 2009 or so. And then that's when I actually started this blog called Easy Breakouts, where I was just putting my stock picks up on a blog every day. And I put up a page with computers on it too, because I knew where to source really good computers. And I know what traders need. I know what I always liked, like a multiple monitor setup, high-end computer. It was always something I was really interested in. My whole upbringing through being a stockbroker. I used to have those big fat back monitors. I had 4 of them on my desk. You're thinking back to it now, look ridiculous, but in the early 90s, no one had that.
Epic.
So
Yeah.
it's pretty cool.
Yeah.
So that's where kind of Easy Trading Computers was born.
Nice.
And I just started trading for myself, and then the computer business really took off, and I really enjoy helping people optimize their trading setup.
Yeah. I think that's awesome that you had, those were your two like main loves of your early adulthood, that you like loved trading and Wall Street, and then computers and tech, both starting from childhood and with good examples early on. Because look at how they have been married. I mean, anyone with an internet connection thinks they're a trader now with Robinhood.
Right.
And I mean, the barrier of entry to trading is crazy low. But then,
Right.
the first year that
It's almost too low.
Yeah. Some would say. I mean, I think a lot of people have lost, little nest egg by thinking that is as easy as pointing and clicking on an electronic device.
Right.
Yeah.
But if you look back in history, a lot of the biggest technological advancements were because of Wall Street. So like even the telegraph, the main demand for the telegraph was price information from city to city. Before they had the telegraph, believe it or not, there were people standing at the base of the Manhattan Island sending hand signals across the river into Hoboken, and there was a chain of people on mountaintops sending hand signals of price data down to Philadelphia, all the way down to Philadelphia.
You're
You look
being
it up,
serious
the
right
real
now.
thing. What's that?
I said, you're being serious right now.
I am being serious. And then the telegraph helped with that. And then, of course, the telephone.
Yeah.
Even the stock ticker was a major invention. Electronic trading, can't do it without computers.
Yeah.
So
You're
a lot of
absolutely
technological innovation has been really because of Wall Street. Wall Street funded it. Wall Street needed the information faster.
right.
And that's kind of what's happening. That's what continues to happen.
Yeah. I mean, I love that. And it makes so much sense. I mean, the way that we trade now, there's so much computer based. I mean, there still is the floor of the Wall Street in New York and Chicago. And
Yeah, I don't think these guys are really doing anything because it is all electronic.
yeah,
Maybe they're supervising the like New York Stock Exchange. They have specialists who keep an eye on a couple of different stocks to make sure the book is orderly. I think
yeah,
that's what they're doing. That's
it
it.
makes sense. I mean, everything is run through the internet now.
It's more like a museum and a studio for CNBC.
Okay, so you're my favorite because you just tell it like it is, and you have legit experience to back it up. So I love that. So you evolved over time, and you just figured out that by starting charting literally in your teenage years, you really prioritize understanding the way that the market moves and what patterns are and what they look like. And then the fact that you had the patience for years in order to not catch that falling knife. I mean, that's incredible. That's something that I think a lot of traders struggle with is patience and just wanting to get in. I mean, there's such an adrenaline rush around trading that you just want to be in the move. But if it's not ready, like
Yeah.
patience is a major thing.
Yeah. Over trading is major. And I've been guilty. And sometimes I can still fall into it. It's an emotional thing.
Mm-hmm.
Good trading, you need to nearly be like a robot. You have to be very disciplined and stick to your rules. But we're emotional beings. We're not robots. And so for me, over trading can be a very big deal. So I have to really hone in on it. 80% of trading stocks, and I'm more of a day trader, not really a swing trader of stocks.
Okay.
And 80% of it is waiting.
Yeah.
It's waiting. You're just sitting there like a tiger behind the bush, waiting for or a lion, waiting for the wildebeest to come by, which in my case would be a perfect cup and handle, for example. That's one of my favorite trades. But you got to wait. And so, like days like today, the market's so volatile, mostly to the downside. People are like, the adrenaline's going more than it's been. And so they're anxious to do something. But this is like the worst environment to put your toe in the water. You're gambling right now. If you're day trading this market, you are gambling.
The candles are huge right now. I mean, it's massive movement.
It's crazy. It's too much uncertainty.
Yeah. Yeah. And to try and hold a position overnight right now is very challenging, I feel like. I mean, you just have no idea what the hell is going to happen.
Right. It could be up or down 5 or 10%.
And even if you are following a pattern within the market and that should continue for multi-days, I mean, there's no, it's not near as secure as potentially in previous less volatile situations.
Right.
So
Go ahead.
Well, I was just going to ask, like, what's your tip then that being in this game for a bit, how do you best manage not over trading or recognizing and calling out and saying this market is kind of a mess right now? Like I'm going to abstain or be very particular. How do you manage that psychologically?
How do I manage it psychologically? I think it's a practice. So I think I've done enough reps. I think I've gotten hit over the head with a hammer enough times that, what the definition of insanity is?
Doing the same thing at time after time
and expecting different results. Exactly. So I think I've had enough reps, and unfortunately, it's a hard lesson to learn for most traders. A lot of traders don't survive that cycle, but you got to learn to catch yourself. Trying to force trades that just aren't there, or seeing things that aren't there, and it's being patient. So for me, having something else also to focus on, which I love the computer business. I enjoy the technology side of it so much. That's been a good balance for me. So I don't have to stare at the market all day. If you're staring at a 5-minute chart or a 1-minute chart, you're watching every tick go by, you're going to go a little loony. Exactly. So so what I do is I put my alerts, points up like resistance or support. I'll just set alerts and then I'll work on something else. And if my alerts go off, I'll take a look and see what's going on. I'll make a decision in real time. but sometimes changing your focus, because you can overfocus on trading. So that, I think, is one tip. And if you're trying to force it to happen, that's also danger. So don't force it. Don't let it come to you. Sit and wait for your perfect setup, the one that has worked for you in the past. Just even if you only have one pattern that for you it seems like it works 60, 70, 80% of the time, stick to just that pattern. That would be one tip. I could probably give you lots of tips.
Those are great tips. And I think that that's like, it could be seen as the annoying answer, but it's the real answer. That fact that experience is what makes you push past these things. Like the fact that you've given into FOMO or revenge trading like 100 times and you realize that always ends shitty. Like at some point you're going to either just be not a trader or you're going to stop doing that.
Right. And I would say, if you're having that problem and now you've lost so much money, you're in like such a fear mode, you got to get a grip on like micro trading and like really micro trade, because you don't want to blow up what you have on the side for trading, and you don't want to bet the ranch on trading. Yeah. And unfortunately, historically, a lot of people who show up, they don't have a lot of money and they wind up losing a lot of money very, very quickly, and they try to force it. And so if you're new to trading, I would recommend micro trading a couple of shares, like a couple $100 at a time, if that's all you have. Using stop losses. Don't allow a small loss to turn into a big loss. Being able to admit you're wrong when the trade's against you. That's a big thing. You know, we don't want to admit when we're wrong. We never do. Right. But so it's a big lesson in admitting when you're wrong. And so micro trading is better than paper trading. I think paper trading, you don't get enough of the emotion around. You need the emotion. Paper trading, that emotion isn't there. It's a different energy when it's real money. Yeah. So that's a part of it as well.
Yeah, I feel the same way. Like I've tried paper trading and it's like, well, shoot, if I just do 100 shares or 100 option contracts, look at how much money I can make like that. Right. It can foster bad habits. But if you have some actual skin in the game and a little bit of money on the line so that it feels real and tangible and there is an outcome at the end that impacts your account. Yeah, but you're safe.
Exactly.
Yeah. What do you think is the normal like time to profitability for young traders now with everything that we have access to and all the noise and all the potential?
It's so hard. There's so much noise. I'm not going to talk about politics or any of that. I will say, though, in general, and I've thought this for a very long time. So where you focus, where you put your energy is really important. If you're really focused on the noise, or even just having CNBC on or Fox Business or Bloomberg on in the background, you're going to hear so many things that are a distraction, will change your focus. It'll make you look somewhere else. If you can just focus on your system. So I honestly believe, and some people keep telling me I'm naive, but I know I'm not because it works for me, is that if I can just look at a chart, I don't need to know the news of the day. I can tell you with a decent level of certainty whether I'm comfortable trading that stock or not, just looking at the chart. I don't need to know the earnings. The story of a company will prevent you from taking action, or might make you fall in love with the stock when you shouldn't. The story of what they do. Now, look, I'm an entrepreneur. I love business. I like what a lot of these startups do. It's super interesting, and I want to learn about them. But all the information you need is in supply and demand. It's in the chart. You can see the supply and demand in the chart. All you need is the price. Daily chart is a starting point with the volume. When the stock breaks out to a new high on volume, you know institutions are accumulating the stock. That's your safest entry point. You put a stop order in, maybe, depending on how you trade, could even be, it could be a 1%. It depends what your position size is and how much you're willing to risk. But it's a much lower risk trade than buying something because of news, or you're in love with the technology. You know, it's just, that's what I think. So I'm very conscious about blocking out the news. And so, I mean, obviously the noise flow these days is just over the top. Sometimes I wish I could just walk around with a bubble over my head and not listen to it. Because not only does it affect your trading, it affects your everyday life.
Mhm. Yeah, the psychological impact alone, you're right, of the news and the potential like waves that it can stress you out is not good for your mental like
Yeah,
mindfulness and focus. And I am so glad that you said that because it makes me feel so much better about my system because I don't prioritize fundamentals as long as the company's not like a garbage company. But
right,
I don't watch news. I don't engage in that. Like I have studied the crap out of charts and supply and demand and volume and what things look like and when it looks like it's false or when it's real and what that looks like with the volume that's supporting
right.
the move. And so I feel way better about myself right now just talking to you.
Awesome.
Um, so
That's
what
my
is
goal in
your
life, to
yeah?
make people feel good about themselves.
I mean, you can mark today as a success in your book.
Okay, thank you.
What is your favorite part about trading? Like personally.
Um, I I don't like to be told what to do, so I would be a terrible employee. So, but I am married for 20 years, so I have learned to be told what to do on some level.
Different compartments.
Yeah, exactly.
The freedom.
So for me, it's a freedom thing.
Yeah.
I can be anywhere, anytime. I don't have to do it every day. Um, there's the challenge of it is always interesting.
Hmm.
There's so many parts of it that I like. So many parts of it. Sometimes it can be very stressful. It can really, when you have a couple bad trades in a row, it brings up all of your head trash, even stuff from childhood. I mean, you can really get into a bad loop. And I have a sad story on around that. And somebody I know very well, was a trading commodities in the early 90s. And on his first trade, right after he got his badge, he was allowed to trade in the trading pit. He made like $150,000 on his first 2 or 3 trades. And his ego exploded.
Yeah.
And on his next trade, he lost $250,000. And his relative had to bail him out because he was negative with the clearinghouse. And that destroyed his self confidence to this day. And it's like 30 plus years later. And it's just very, very sad. And I had a business partner who blew up trading, just was never the same person after that. My business partner um, he just got addicted to trading like SQQQ, the triple ETFs,
Hmm.
either way, because they're so volatile. He got addicted to trading them till he blew up his account. And you have to be careful of that. It can be very addicting, and you get that gambling mentality, and it's not gambling.
Yeah.
You ever meet somebody, say, like at a meetup, or you meet new people, and you say, oh, I'm a trader. They're like, oh, you gamble. You're a professional gambler.
Nearly all of them.
I hate that.
Hmm.
I
Same.
understand why if you don't
Yeah.
know, but if you can have a system that you can repeat and it works most of the time, you can make money trading. And
Mhm.
just like there's people who play poker who have figured something out. Not most of them,
Yeah.
but it's true in trading. I think it's easier in trading than it is in poker or blackjack. So it's very possible. You just need a repeatable system.
Yeah, and take it seriously, I think. If you treat it like a true business and, like if you treat it like a career choice, then you have to respect the fact that it's going to take you years of experience and
Right.
education and market tuition. But if you really take it seriously and manage your downside to some level, then you can stay in the game long enough to take the lessons and put in the reps that will teach you. And then that is not the way that an addiction or a gambler treats something. They just throw good money after bad and they feed into
Right.
emotions and the energy behind it and the hope. But if you lean into the skill and the strategy and you respect your system and honor it as a business for your financial situation, then it feels completely different. Which, to be fair, takes time to learn as well.
Right. Just keep learning as much as you can. I mean, it's such an important thing. It's
Yeah.
not a get rich quick,
No,
strategy. It isn't.
it's a lose
So
first and then figure out how to get
you
better.
need I hate to say it, but it's true. You need to take a couple bumps on the head to figure it out.
Yeah.
It's
I
almost like, like Rocky getting knocked out by Apollo Creed. And then in Rocky 1, he needed that to beat him. So
yeah,
it's kind of
dig
like that.
deeper.
Exactly.
Yeah.
Exactly.
I did want to ask if you had any thoughts on your best habits to keep you like stabilized through the period when you're figuring out your system and you're getting really good at identifying your systems and only sticking to those, because you did mention that you like to stay busy and use alerts during your day. And
Yeah.
I actually really love that. And that's what this podcast and my kids and stuff allow me to do, similar of like have trading hours and then not stare at the chart for 7 hours of New York session,
Yeah.
because I overtrade and I trade like shit when I do that. And so
Right.
like that was a killer one.
Right. So trading is a peak performance activity. So you need to be very respectful of your body and your brain. I think having a daily exercise routine is pivotal. If you're somebody who, drinks a bottle of wine every night and you wake up a little groggy, you're not going to be at your peak level. You're not going to be good at decision making. And decision making, that's what it is. You're making decisions in real time. It's a peak performance activity. And so you should always have your mind at its peak. I'm not against, having a good time, but I think you should take care of your physical body, take care of your brain. I do a little bit of meditation, not too much, but I do like to listen to things about trading, reading about trading, studying trading. I consume everything I can in regards to trading in different systems. Not so much news, but more about methodologies. I'm more about methodologies more than anything else. I like history too, and understanding history of the past and how our whole economy was created, how the banking system works. I just think it's really healthy for your brain to understand these things. And it's a practice. You have to enjoy these things.
Yeah, that's smart. And that's part of what you said earlier too about being a continuous learner, because if you ever feel like you're complacent and you're all good, like you're probably going to be humbled in a hot minute.
Yeah, exactly.
Yeah. So I was a little curious, and I think you've kind of already touched on it, about how when you really struggled, and it seems like maybe for you, a struggle period earlier in your career would be maybe the stockbroker years when you had to weather that
Yeah,
drawdown and pull your
well,
kids' money out.
full transparency, the year, so 2000, 2001, 2002 was very difficult. That's when I had to figure it out. So that's when I discovered William O'Neill and those chart patterns. And then I took his strategy and I refined it and made my own strategy out of it, which is called easy breakouts. Um, and then what was the question again? I had a point there and I forgot it.
How did you get through that, and what did that look like pulling out of that?
It was really hard to get through that because, there was I remember a couple of weeks in there, I was losing sleep. I didn't know this was right before I got all my clients out of the market. So I was carrying the weight of not just my account being burned up, but like dozens of some pretty high net worth people's accounts being beaten up. And then my phone would ring on my desk at work and, I had to play psychologist to these people. And I didn't even believe what I was telling them. So that was really, really tough, but I was not going to let myself quit. And then even in 07, 08, when the volatility kicked in again with the real estate nonsense that happened, and that the NASDAQ dropped like 70% that time. And the Dow, that was ridiculous what happened before the government came in and saved it. I got a little caught up in trading the triple ETFs. They had just come out. I got a little caught up. I took some dings again. It's like I almost needed a reminder for me to go, oh yeah, like don't change your quality of life because of your ego. So the market has a way of reminding you when you're getting out of line.
Yeah.
So I guess my tip would be don't trade bigger than you are. Don't put your livelihood and your quality of life at risk to be right. I guess that would be the tip. And again, having some other thing that you focus on is a big one.
Okay. Yeah, I love that. And I'm a big fan of Paul Tudor Jones and his story and evolution. And that's something that he has always said, is that he likes to trade smaller when he's trading poorly or in a drawdown or is not quite sure what the market is doing. He downsizes, which I think an early trader and an early mistake is trying to fix your accounts. When you go into drawdown and when you start making errors, you want to get back to where you were. And so you want to get heavier to fix it
Called
fast.
revenge trading, sometimes they call that.
Yeah.
You do trades you wouldn't normally do to try to get it back.
Yes.
Yeah, that's a thing.
Yeah, don't do that, right?
Don't do that. Take a break. You're better off just to go take a nap. If you feel like you want to do that, just go in the other room, take a nap. That'd be better for you. Let your mind settle down.
Yeah. Yeah, I think that's great advice. Every time even if I just like get out of my office and get in the backyard or something with my kid or gardening or anything like it, you can start to turn that headspace and then realize I wasn't going to do that. I wasn't going to revenge trade. I'm really glad that I'm no longer in my office and near my mouse.
Right, exactly.
Nice.
Me and my mouse. Is that what you said?
Yeah, my trading mouse. The button.
Awesome.
Yeah. Okay, so your system is easy breakouts, right? That is what you kind of like, you studied and then you understood your chart patterns and then you sort of refined it and wrote it up for yourself and for your own system. And that's something that you offer, right?
Right. And so I do have a website called Easy Breakouts. It could use some refreshing at the time, but it's still live. We have like 2,500 members. I put up 10 stock picks every night. But before you look at the stocks, there's an indicator that says, what's the market's direction? So right now it's like, don't trade. It's essentially red light. Don't do anything because this is insanity and this is not going to work. And you're probably going to be wrong no matter what you decide to do.
Yeah. Like last week was massively bearish. And today the candle on the Dow is over 800 points. I'm like, this is great on a Monday. Like Mondays traditionally are more rotational. And the last 2 Mondays have been like massively bearish. It's like, holy crap. I mean, do you short also, or are you mostly a long bias?
Well, short, but I want to hold that position for like 10 minutes.
Yeah.
Like just an obvious breakdown on a chart and just be in and out of the trade. I was short Carvana because it has nothing to do with my system. Nothing to do with my system because the stock had such a huge run. And as we all, I'm not even going to go there. I was short the stock and that was a need to be right trade. And I got lucky on it. And then it kept dropping. And so you can get in that loop. Sometimes you make money trading. You pick a stock, it breaks out, it runs, you sell the stock, and then it keeps going up. So now you beat yourself up for selling it too early. And you need to train yourself to give yourself a pat on the back because you did the right trade. You're not going to sell the tippy top. It just doesn't happen.
Thank you. I there's a saying that I say is peace with your piece, like PACE with my piece, because that's exactly it. Like to think that you can be a perfect trader and get in at the exact pivot at the bottom and sell at the exact tip is madness. And if you try to catch it every time, you're going to be disappointed every single day.
Every time. Ugh. Absolutely. And that's a bad chemical to reinforce in your brain, in your fight or flight response, because that's a fight or flight reaction to not give yourself a reward, a mental reward, like a dopamine reward for making money. Dopamine rewards are to train yourself to be good at something. So like even video games, you get better at them by dopamine hits. Trading's the same way. So if you allow yourself to beat yourself up on a trade you made money, that's an issue.
Yeah, and it's only going to feed more negative habits, and then you're going to end up chasing and giving it all back.
Right, exactly.
Okay, I could talk to you forever about trading.
Forever.
But so I'm curious also about your computers that you help people facilitate finding what they need, because I was in a situation a couple of years ago where I was getting so much slippage and I was getting really frustrated. And I have a trading friend, Peter, who's been in my community we met our first year in trading. And so we've been tight ever since we get together. And he was like, you have to read this resource from Easy Trading Computers because they told me everything that I need to know and they hooked up my system. And I did utilize that. And I made some smaller, but some decent upgrades to my system based on your information. And it improved radically afterwards. So like, hook us up. Tell us what we need to know. If we're in the situation where we're like, okay, I think I know how to trade, but I'm having these tech issues, then that becomes a separate issue.
Right. So